Hey everybody, I'm Aaron Norris, and this is the Norris Group's Real Estate Headline Roundup in 2. Let's get to the stats for the week. First up, the California Association of Realtors reports that the first-time home affordability rate is at 69% for the fourth quarter of 2010, matching the record high set in early 2009. The high desert affordability rate is at 85%. Yikes. Zillow says national home prices dropped 2.6% during the last quarter of 2010, and 27% of mortgaged homes are underwater nationwide. The Lender Processing Services says homeowners in foreclosure process were an average of 507 days late on payments at the end of the last year, and the Mortgage Bankers Association, with a little bit of good news, says commercial and multifamily origination is up 36% from 2009. So lobbying groups and think tanks are descending on Washington, D.C. Up on the chopping blocks are, of course, Fannie Mae and Freddie Mac, mortgage interest tax deduction, loan limits, you name it. You're going to start hearing a lot more about qualifying residential mortgages, or QRM. These are loans that are allowed to be fully securitized. The problem is, however, that not everyone can agree on the guidelines. Sheila Bair wants 20% down by homeowners, while Wells Fargo wants 30%. Non-qualifying mortgages face a risk retention rule requiring lenders to keep a portion of the loan on their books. The thinking is that tighter guidelines will mean more expense, which could equate to homeowners having less access to financing, which could then lead to more price declines. So we'll have to be keeping a very close eye on QRM and the legislation that is sure to follow. Standard & Poor's reports this week that 80% of the loans cured by a modification in the time period stretching from 2007 to 2010 defaulted again within 24 months. Those are not good numbers. And with loan mods on the decline and redefaults a major issue, Fitch says a foreclosure spike is very possible. The California Housing Finance Agency yesterday, February 10th, fully implemented the programs under its Keep Your Home California initiative, a nearly $2 billion endeavor funded by the U.S. Treasury's Hardest Hit Fund. The funds are meant to help residents who are unemployed and underwater. Not all banks have signed on to some or all of the programs in this initiative. See keepyourhomecalifornia.org or call 888-954-KEEP if you want more information on that program. That's it for the news this week. Up on the radio show this week is Marsha Norris, my mom, in her final interview before I Survived Real Estate 2010. Thank you so much, everybody who sent cards and flowers and came to the service. The outpouring of support has just been awesome, and it's so appreciated. Upcoming February 23rd, Bruce will be interviewing Sean Watkins, actually, at his club, Investors Workshops. That's February 23rd. March 17th, we'll be up in Sacramento at NorcalREIA, and then on March 19th, we'll be teaching the Advanced Investing Skills and Strategies 2.5 up in Sacramento with NorcalREIA. Check out our calendar for information on that. For information on hard money loans, check out thenorrisgroup.com, or for trust deed investing, check out tngtrustdeeds.com. Have a fantastic weekend, and we'll see you next week.